Once again, welcome to you all to today's session that is based on financial accounting. So, the topics to be covered for the day are trading account, profit and loss account, balance sheet, and adjustments. As you know, that the financial statements are prepared at the end of the year. So, it is very important to know that how to prepare these financial statements and what is the role of financial statement, or you can say that what is the significance of financial statement and how they are prepared. And you have to be very careful when you are preparing these financial statement. So what are the methods and how to prepare the financial statement with adjustment. So today's session will cover the different topics, all the aspects of these financial statements. So the very first thing, or you can say that what is the final account? This is the question. And final accounts, as you know, are the set of financial statements which are prepared at the end of accounting period. It means, as you know, that you might be familiar that there are two types of the years: calendar year and financial year. So, final accounts are prepared as per the financial year beginning from 1st April and ending to 31st March. So for this particular period, you are preparing the final accounts, and these are the financial statements to disclose the financial performance and financial position of an business organization. These accounts include trading account, profit and loss account, and balance sheet. So first of all, we have to focus on the final account. Why we are calling them the final account? Because finally you want to know, or you want to take the information from your accounting books about the financial performance of the business organization and the financial position in the form of assets and liabilities. So these are called the final accounts, the financial statements. So what is the need of financial statement, and what is the role of financial statement, and how to take care when you are preparing the final accounts, right? We are covering this particular topic. So I think now the meaning of the final account is clear to you, that final accounts are the set of financial statements, right? As I told you that final account will consist trading account. So what is the trading account? What is the purpose? The very first account in the financial statement is trading account, and it is prepared to calculate the gross profit, to compute the gross profit, which is measured or which is calculated on the basis of the direct cost involved in the production, or the you can see that this is the difference. The gross profit is the difference between revenue generated from your business and the cost of production, right? So gross profit is to be calculated by preparing the trading account. And the components, when we talk about the components of trading accounts, it means what are the items which are displayed or which are recorded in the trading accounts are opening stock, purchase, sales, closing stock, direct expenses which are directly incurred or which are directly related to the cost of production, right? So trading account is prepared under the financial statement to find out the gross profit, or maybe there is a gross loss. So in order to calculate this gross profit or gross loss, you are preparing the trading account. And what about the profit and loss account? The very purpose is to ascertain the net profit or loss of the business by taking into account both operating and non-operating income and expenses. It means after finding out the gross profit, you have to calculate the net profit or net loss of the business. And for that purpose, you have to consider the operating as well as the non-operating expenses and incomes. And what are the component? It includes the gross profit which has been transferred from the trading account, already you have calculated, and indirect expenses and direct and other incomes. Indirect expenses which are required to operate the business, but they are not directly related to the production of the business. For example, salaries, rent, and depreciation. and telephone expenses, insurance, and some other expenses. So whenever you are preparing the profit and loss account, you have to mention all the incomes, all the expenses, and you have to take care that every loss and gains which is related to the business is to be mentioned in the profit and loss account. So on the basis of you can say the trial balance, right? Because the very first thing is that how to prepare the profit and loss account, how to prepare the particular income statement. So it would base on the summary of the balances extracted from the ledger. So already you are having in your hand the trial balance you prepared. So after that, after preparation of the trial balance, you have to consider those items which are mentioned in the trial balance, and you will prepare with the help of the trial balance the trading account and profit and loss account at the end of the year, or you can say the after a particular accounting period, right? So components you are familiar with of profit and loss account. So different expenses as were considered in the business organization, because the very first book, the primary book, journal you maintained, and you recorded every transaction which occurred in the business or during the operation of the business in the form of the journal entries, and you posted those journal entries into the ledger in order to classify the transactions in the different accounts. And after that you prepare the trial balance. So with the help of the trial balance you will prepare your financial statement, right? So trading account, now you are aware that it would be prepared to calculate the gross profit, and profit and loss account would be prepared to find the amount of net profit, or maybe if there is a loss, it would be disclosed by the profit and loss account. And what about the balance sheet? It is not the account, this is the sheet. So what is the purpose? To provide a snapshot of the financial position. So if you want to compare the financial performance of any business organization, then you come to prepare the P&L account, right? But when it comes to disclose the financial position, that what are the assets, what about the liquidity of the business, and what is the liability, what is the capital of the owner in the business. So everything is disclosed by the balance sheet, everything is displayed by in the balance sheet. So what are the components? It includes current assets, short-term assets, right, and long-term assets also, you can say the fixed assets basically. So all the assets are displayed in the debit side or asset side of the balance sheet, and the liabilities, if there is a case of the current liabilities, long-term liabilities, short-term liabilities, so everything is to be displayed in the credit side of the balance sheet, right? And as you say, or you have observed that the particular format of any account, there is a debit side in the left side, right, and credit side is in the right side. But in the balance sheet, if you see, you will observe the liability side, the left side is the credit side, and the asset side would be the debit side, right? So balance sheet, why we are preparing the balance sheet? In order to disclose the financial position of the business organization, or to ascertain the business position in the form of assets and liabilities of the business organization, right? So I think it is enough for you to develop the understanding of the financial statement. Okay, so for the small revision, I just repeated that the financial statements are called the final accounts because finally they are prepared in order to ascertain the profit or loss and financial performance and financial position of a particular business organization after a accounting period, right? So at the end of the year, with the help of the trial balance, you will determine the profit, gross profit and net profit, or gross loss or net loss, and assets and liabilities while preparing the financial statement. So with the help of final account, the owners or the user of accounting would take or gather the information as per the requirement. So these financial statements are required for the very purpose to find out or to calculate the profit or loss in the business organization. But there are some other roles also, and further we would be covering that in today's session, right? So what is the trading account, what is the profit and loss account, and what about the balance sheet? I think now the meaning is clear, the sense is clear what I am just speaking to you. So trading account is that account which is prepared for the calculating the gross profit or gross loss, and that profit or loss is transferred to the profit and loss account. Both the accounts are connected, right? But you have to keep in your mind that it is very important to just differentiate these accounts, because when you are considering the balances or the summary of account balances in the trial balance, and you have to prepare these accounts, and you are carrying these account balances from trial balance to trading and P&L account, so you have to go for selecting that particular item which is related to trading account would be shown in the trading account, and which is related to P&L account would be displayed in the P&L account. So how will you differentiate, how will you sort out that what kind of the expenses would be displayed in the trading account and in the P&L account, right? So in the next slide I would be covering about that, but before that you should consider that these accounts are very important, because every information would rely on the basis of the particular financial statement, right? So components of the trading account and P&L account and balance sheet I would express in the format, because there are numerous items, there are numerous expenses and incomes which are to be treated in these financial statements, right? So what about the significance of final accounts? Assessment of financial performance, the very first this heading. The final accounts help in evaluating how well the business has performed over the accounting period. So if you want to assess the financial performance, it means suppose you want to compare your business performance with other competitors business performance. So on the basis of the profitability you can assess the financial performance of your business, right? Or suppose from the past performance you want to compare with your current performance, so on the basis of the profitability you can assess the financial performance of the business organization, right? So in order to determine the profitability, again it comes to the trading account and profit and loss account, okay? And second one is the significance is that evaluation of financial position. In order to provide the clear picture of your financial health, right? Exactly what is the liquidity, what is the solvency of the business organization, how many assets you have, what is the worth of the assets you have, and what is the liability to pay in your business. So and what amount of the capital or the quantum of capital invested in the business. So every information regarding the assets and liabilities and capital is clear with the help of the final accounts. So by preparing the final accounts you can disclose your financial position, right? Or you can calculate the financial position, right? And decision making, no doubt whenever the user of accounting or the owners of accounting are going to take the informed decisions, the final accounts are required over there, and management definitely will ask the accountants to prepare these statements, because they would be taking the decision based on the financial information. If they have to analyze the final accounts, if by applying some tools, further we would be discussing about it, like the ratio analysis, fund flow, cash flow statement. So there is a particular requirement of final accounts when it comes to take the financial decision, management decisions, right? Suppose there is a particular capital budgeting decision, so everything will base on the information, accounting information, and these accounting information would be taken from the final accounts, right? So decision making is very important part of any business organization, and final account may be analyzed for that purpose, right? So it is very important part. And regulatory compliance, as we know that the business organization has to comply with the with some rules or standards of the accounting. So preparing final accounts ensures compliance with statutory requirements and accounting standards, and it provides the transparency and reliability, okay? So if the accounting information is not reliable, and if your final accounts are not providing you the transparency, so that time there would be no meaning, right? And you cannot comply with the accounting standards. Okay, and this is also a source of the communication, stakeholders communication. Final accounts are used to communicate the financial performance, the position of the business to stakeholders. And as you see that once suppose the stakeholders or the investors, okay, we take the examples of the investors in a business. So investors are planning to invest in your business organization in the form of securities or deposit. So that time they will think, or they will have the opinion that first of all they should come to take the information regarding the financial performance and the financial position of the business they are going to invest in, because the investment will base on these financial information. Okay, suppose there is a the particular organization which is making loss again and again in the year to year. So that time the investors will go away and they will not come to make the investment in that particular organization. So in order to communicate that what about the situation, what is the condition of financial health, and what is the you can say the profitability with the organization, so everything can be communicated through these final accounts. Okay, and the last but not least, it is the taxation. The accurate final accounts are essential for determining the correct amount of the tax. It means whenever it comes to calculate the tax, okay, you are going to compute the tax liability. It would base on the financial statement also, because the profit amount, right, would be the base where you are going to calculate the tax on. So how will you calculate the profit as per the final accounts, right? By preparing the final accounts, trading account, profit and loss account. So if you are not preparing, if you are not maintaining the final account, so what happens, that there is no profit, right? It means there is a profit but you cannot calculate the profit, right? Because you are not maintaining any account. So in order to compute the tax, in order to pay the tax liability, it is important to prepare the final account. So there is a particular significance of final account in the field of taxation, right? And ensure compliance with the tax regulation, because when the income tax authorities will ask to produce the proofs or the document, so in the form of final accounts you can produce your documents, and it will describe that what is the financial profit. Okay, so these particular points are very important to consider when it comes to know the significance of final accounts, right? But as you know that we are preparing the final accounts, okay, and final accounts will disclose the financial position of a business organization, and will describe and will determine the profitability, and you can compare the financial performance of two businesses or more businesses, or in the term of past performance you can compare with the current performance, right? But there are some limitations of the final accounts. It means there is no doubt that final accounts are providing you the true picture of your financial performance, of your financial growth, and the business position, right? Financial position. But there are some limitations also of the final accounts, right? So historical nature, the very first point is there, that final accounts are prepared based on historical data. No doubt the original values are written down, and it reflects the past transaction and events. They do not provide information about the future performance. So there is a particular limitation. Okay, it means you can analyze the final account, and you can apply some tools, and you can go for making the decisions based on the final accounts. But the final accounts in itself is not giving you the picture of the future. Okay, so you have to just collect the information, the past data you can collect from the final accounts, and you have to estimate that you have to estimate your future, right? So this is the particular limitation of final account, that final account is not providing you the picture of the future. You have to go for the for other tools to be applied in order to determine the future picture. Okay, so for example, trend analysis, right? Budget you can prepare, but this is the limitation with the final account. The final account in itself is not providing you the future picture of the business organization, right? And exclusion of non-monetary aspects, as per the accounting rules, every information which can be measured in the monetary value is displayed, is mentioned in the books of accounting. In such a way, the final accounts are also prepared while considering the monetary value of the transactions. So it is not including the non-monetary aspects. For example, employee morale, market condition, customer satisfaction, and technological advancement. So whenever you want to gather the information regarding these points or these aspects, it is not touching, right? So final accounts is having some limitations we are discussing today. And another one is that judgment based estimates, certain items in final accounts like depreciation, provision for doubtful debts, because you are not having the correct information, or you cannot estimate. Basically, you can estimate, but the very accurate figure you cannot take into your mind with the help of the final accounts, that exactly what would be the doubtful debts, what would be the particular loss through the debtors. So you have to make a provision. It means you are taking in your mind that there might be some loss through through bad debts. So you are making the provision, and you are not sure, you are not very sure that how much the particular value of the assets would decrease over there in your business by using that particular asset. For example, if you are using the machinery for a number of years, so that time what value would be after some years. So if you want to uh, just spread the value of the machinery over the life, so that time you have to charge the depreciation by a particular percentage. So such kind of the decisions are taken on the judgment based decisions are taken in the business. So this is the particular limitation, that judgment based estimates are there, not very sure that accurate amount, how much accurate amount would be of doubtful the bad debts or the depreciation. Okay. And omission of qualitative information. Final accounts do not capture qualitative information, as already told you, that suppose customer satisfaction, brand value, and competitive positioning. If you want to compare with your competitors, right? So that or what the particular position in the market is of your organization, you cannot take the picture, or you cannot review the picture of your business in these terms through the financial statement of final account. So final account do not capture the qualitative information, only the quantitative information in the forms of the monetary value of the transactions is disclosed by the final account or the financial statement. Okay, so omission of qualitative information is another point that describes or implies that there is a limitation of the final accounts. And next one is the static nature. The balance sheet represents the financial position at a specific date. As I told you that at the end of year, you have to prepare the financial statement. Suppose on 31st March, you are preparing the financial statement, right? And you reported that this is the financial position by preparing the financial statement or by producing the financial statement, right? And because the next day or after 2 days, if you want to take the correct picture, it will not provide, because it is having the static nature, right? On a particular date you disclose that this is the financial position of the business, but because there are some changes, right? So the current situation of the business due to changes occurring after the reporting date, and it is not reflected, right? So current situation cannot be reflected of the business, right? Due to the changes. So some changes are taking place, right? As you see or observe that business organization is working in a very dynamic situation, and different changes are there in the market. Suppose the customer satisfaction, suppose the value of the assets, right? Value of the assets is decrease or increase. So you are not changing again and again, or the current picture or the current scenario is not being displayed or disclosed by the balance sheet or the financial statement. So you can say, having the static nature, this is the limitation of the final accounts. And Another point is the ignoring inflation, right? Final accounts are usually prepared on the historical cost. As you know that original values are displayed, are mentioned in the accounts, and that time if there is an impact of inflation, is it is not reflected in the balance sheet, in the income statement. So this can distort the real value of assets and liabilities, leading to inaccurate financial analysis. Possibility of manipulation, no doubt there is always a risk to make the manipulation in the accounts, and there may be a chance of the fraud also, right? Suppose there is a involvement of some personnel in order to commit any fraud, so that time there is a limitation, because manipulation is easy, and if there is a manipulation, it will undermine the reliability of final accounts, and creative accounting practice can distort the true financial position and performance. If you are manipulating the accounts for any reason, right, or someone in your business organization is committing any particular fraud, right, or that person is manipulating the accounts, so that time what would happen, the true picture or true financial performance and the financial position you cannot disclose, or you cannot get the information of it, right? And complexity and understandability, if the final accounts are complex in the nature, they are complex, so that time it is very very difficult to understand. But for those people who are not having the sound knowledge of the accounting, so if you are not from the accounting background, accounting field, so that time you can feel the difficulty in order to understand the particular information, accounting information, which are written over there, or which are mentioned in the final accounts. And now it is the time to view, or to take a view of the format of final account, how to prepare it. There is a particular format, and trading account, very firstly we are discussing. So there are columns, particular amount, left side the debit amount, and right side the credit amount. So this is the final account format you have to prepare. So one by one, we would read every item. That the first item is opening stock. It means what is the opening stock? Suppose in your go down, in your store, you are having some products which were not sold last year. So this is the opening stock this year, or you can say the closing stock of the previous year is known or assumed or considered as the opening stock for the current year. So opening stock value would be mentioned in the trading account, and to purchase, right? So whatever the value of the current goods purchase, you have to mention over here, but you have to subtract the value of return outward. If you are returning some goods to your supplier, you have to subtract this particular amount from your purchase, and the net purchase value would be mentioned over there. And carries inward, this is again the expenses. If you are bringing some product, so that time if the particular carriage is to be paid, so you have to mention the carriage inward. And you have to be very careful when you are preparing the trading account and profit and loss account. So carriage inward would be mentioned in the debit side of trading account, but when there is a case of the carriage outward, it would be treated as a indirect expenses. So it would be treated, it would be shown in the P&L account, because the trading account will consist only those expenses, those items which are related to directly related to the production, right? And to wages, as the workers are working in the factory, so they are involved in the production. So this is called the direct expenses, and again you have to show it. And if some other direct expenses are there, you have to mention in the trading account debit side, right? And in the credit side, no doubt, this is the revenue side. So if there is a particular sales for a period, so you have to mention the total sales amount, and you have to subtract the return inward also. If the customers are returning the goods to you, so you have to subtract the total value of return from the sales, right? And net sales you find, so it is to be mentioned in the credit side of trading account. And lastly, you have to write the closing account, and it is to be estimated, or it is to be calculated first, then you have to mention in the credit side of trading account. And then you have to take the total. If the total of credit side is higher than the debit side's total, so what would happen? There would be a gross profit and there would be gross loss, if vice versa. Okay, so trading account is to be prepared very first, and on the basis of the trial balance, or you can say you have to extract the balances from the ledger to prepare the trial balance. And if the trial balance is given you in the question, so with the help of the item mentioned in the trial balance, you can prepare your trading account, right? And after that you have to prepare profit and loss account. So in order to determine the net profit or net loss, you have to prepare profit and loss account. So this is the format. And in the debit side you have to mention all the indirect expenses, right, which the expenses which are not directly related to your production. Okay, so for example, salaries you are paying to your employees, and rent, if the rent of any building, any space, if you are paying, so you have to mention. Insurance and depreciation. Depreciation is not the expenses, it is the loss, and depreciation is charged on the fixed assets. So percentage, maybe percentage is given to you to charge the depreciation on assets in your question. And carries outward is again the indirect expenses you have to mention here. And bad debts on debtors, it means this is the loss due to the debtors. It means the debtors are not making you the payment as per your requirement, or as per the condition, as per the sale, as per the whatever the value of the sales is given to you. So if there is a loss, so you have to mention this loss again in the profit and loss account. And sometimes you have to make the provision for doubtful debts, because it is important as per the accounting rules or accounting principles, that you have to make the provision. Just estimate all losses, right, but not the gains. Okay, so this is the particular thing that you have to keep in your mind, that provisions are to be made, right? It means you are doubtful that there may be a chance of loss due to the unreceiving of the cash from the debtors, right? To administrative expenses, whatever the administration expenses are involved in your business, you have to mention administrative expenses. And selling and distribution expenses, suppose you are going to make the advertisement expenses or exhibition expenses, or there are some expenses involved in the distribution of your goods, so selling and distribution expenses are also displayed in the debit side of profit and loss account, right? And other financial expenses and taxations are also displayed in the in the debit side of profit and loss account. So this is the particular format you see that you have to consider when you are preparing the profit and loss account. So all the indirect expenses would be shown in the debit side of profit and loss account. And as you see that there is a particular gross profit. Okay, so gross profit which was brought down from the trading account. So first you have to prepare the trading account, and after calculating the gross profit, that gross profit would be shown in the credit side of the profit and loss account. So this is the particular format you have to consider, right? So exactly what is the purpose? The purpose is to find the net profit. As you can see here, the net profit would be calculated on the basis of these expenses, right? So what is the net profit? Net profit is the difference between gross profit and other indirect incomes, right, and indirect cost, right? So this is the particular net profit, and the net profit is calculated by preparing the profit and loss account. Okay, now we come to the balance sheet. It is another part of the financial statement you have to prepare. And there are two sides, debit and credit, but it is again to mention that credit side, right, the left side is the credit side, it means the liability, and debit side is the asset side. Okay, so it is opposite to the account statement. In the account, left side is the debit, and right side is the credit side, but it is opposite in the balance sheet. Okay, so the very first item, as you see that this is the capital. What was the amount? What is the amount invested in the business organization by the owner of the business? So capital is to be mentioned, and the net profit which was transferred from P&L account, profit and loss account. In the short, you can say the P&L account. So net profit is to be added in the capital, because the capital is increased by earning the profit in the business organization, and you have to subtract the amount of drawings. Suppose any particular part is withdrawn, right? You are withdrawing the cash from your business organization for the personal use. So if there is a mention that you are withdrawing the money for the personal use from business, So that would be the case of the drawing. So you have to subtract the value of drawing here. And some long term liabilities may be there. You are raising the bank loan, you are raising any other kind of the loan from the financial institution, right? So that time it is to be displayed in the credit side in the liability, because it is to be paid in future. And some current liabilities might be given to you in the question. What are the current liabilities? Which are the short term liabilities or for a particular year? So for example, creditors you have to make the payment to, and bills payable, outstanding expenses, and short term loans. Okay, so this is the particular part of the liability side. And if we come to asset, right? So land and building is there, machinery is there, furniture, investment, stock. So these are some assets, right? And few are fixed assets and other are current assets, right? So how will you recognize that this is the fixed assets or this is the current assets? So if we see or we observe that you are buying the assets, so the fixed assets definitely is blocking your money for a longer period, and in the physical form you can touch, you can see it. So these are the fixed assets. And when we talk about stock, debtors, bills receivable, cash in hand, cash at bank, prepaid expenses, accrued income, so these are the items shown in the asset side, right? So this is the format of balance sheet. Basically balance sheet is providing you the picture of financial position, okay, or disclosing the financial position of a business. So liability and assets, both the sides will describe its financial position. If assets are more than the liability, you can say the financial health of the business organization is strong. But if you observe that liability side is more than the asset, so it is not a very good, it is not good for the business organization's financial health, right? So you can estimate, you can find out exactly the financial position by preparing the balance sheet. Okay, so maybe this is the particular format, but might be that in the question some other liabilities or other assets may be given to you, right? So you have to you are just having an idea that what kind of assets we are talking about and what kind of the liabilities might be there in the business. So if you take an idea, if the particular new item is provided to you, you have an idea, you should have an idea, or you should think that this is an expenses or this is the assets or this is the liability, because it is very very important that if you are preparing the financial statement. Okay, so in the trading account, you have to mention all the expenses which are of direct nature, which are directly related to the production process. And in the P&L account, you have to mention all the indirect expenses. But the another method to recognize that or to identify that which item is related to trading account or which item is related to profit and loss account, and what about the balance sheet items, right? Because when you would be preparing or when you would be solving any question related to final account, financial statement, the very first thing is that you should have an trial balance in your hand, and on the basis of the balances, on the basis of the information, right, of trial balance, you can prepare your trading profit and loss account and balance sheet, right, your all financial statement. But as you have to segregate, right, you have to select that which item is related to trading account, because every item is not shown in the trading account. There is a particular format, there is a particular you can say the statement, right, having the items. So in the trading account, if you are mentioning the item that is not related to trading account, okay, so your gross profit would be wrong. You would be calculating the gross you would be calculating wrongly your gross profit. And if the particular item you are showing in the asset side but it is related to liability side, so what would happen at the time when you are preparing your balance sheet? It should match. It means the liability and assets, both the side should be equal, right? And if you are making some mistakes or if you are making some errors, what would happen? That your balance sheet will not match, and the liabilities and asset side will not match, would not be equal, and your answer would be wrong. So you have to be very careful when preparing the balance sheet or when preparing the financial statement, right? So students sometimes find this difficulty is, sir, there are so many items uh, how to keep in the mind that there it is very tough to memorize all these items because you are having the format. So but in the examination you will not have this particular format with you and you have to remember everything. So sir, there is a limitation of the memory that we cannot have in the mind, in the memory, these all items of or these formats, right? So there is no any issue, right? I would suggest you that you make the practice of solving the questions of final accounts, and gradually you will learn about it, and many more items you will have in your mind because of the practice, because of making the practice of solving the questions, right? So first of all, you have to consider that there are three things. There are two accounts and one sheet you have to prepare under the financial statement or final account and trading account. Okay, I just tell you the another method how to remember, how to keep in the minds of the items of trading account. Okay, so as I told you that you have to show the direct expenses. Okay, just come back to the trading account, right? This is the trading account. So as you see that these are the items: opening stock, purchase, right, and carriage inward, wages and direct expenses. Okay, so these are the items which are related to production, or you can say these are related to the factory. So any item, if you consider that or you think that this can be directly connected to your production or factory, you have to mention in the trading account. Okay, suppose purchase, where are you purchasing from, and after that you will carry that particular goods to your godown or the factory. So purchases also, you can say that it is the particular item which is related to the direct cost. Okay, okay, just have the sense of direct and indirect cost also, because before you solve any question, you should be doubtless regarding the direct cost and indirect cost. Okay, I just tell you that direct cost, it means the cost you can identify in a particular product. Suppose you are having a product in your hand. We talk about any electronic gadgets, okay, or any product you can talk. So if there is a particular product, and if you can identify, suppose anybody asks you that what is the cost of this product, how will you identify? The very first thing you will see, that is the material, the particular material that particular product is made of. So you will estimate that what is the cost of this material, right? So if you are buying the material, if you are buying or you are trading, suppose you are in the trading industry, so if you are purchasing, right, so that is the particular cost of your product, so it would be mentioned in the trading account as a direct cost. Suppose another example we take that who made this product? No doubt the workers. Okay, so workers are directly involved in the production process, and the wages paid to workers or those workers is included in the direct cost, is related to the direct production. So the wages would be shown in the trading account, right? So whatever the expenses you consider, and if those are related to the production process to the factory, so that time you have to consider in the trading account, right? And now we approach to profit and loss account. So what happens that the indirect expenses. Okay, so it means indirect costs we are talking about, which are not directly related to your production process, right? Suppose your employees are working in the office, they are not making or they are not producing the articles or the products in the factory, but indirectly they are connected to your business organization, and they are receiving the salaries from you, right? So this is the expenses of the business organization, but this expense is not directly related to the production process, so we can say this is the indirect cost. And all the indirect costs, indirect expenses are to be shown in the profit and loss account. Okay, so I think it is clear. And the another way is that we are talking about the office. Those expenses which are related to the office, you have to display in the profit and loss account in the debit side. Okay, one thing else that you should consider, and it is important. Sometimes what happens is you are receiving the rent. Okay, if you pay the rent, it is the expense. But when you are receiving the rent, when you are receiving any income in the term of interest, right? So that time you have to mention in the credit side. So this is other income or other revenues, you can say. So in the profit and loss account, other incomes are also shown. So this is the particular account. And now you are familiar with the formats of trading account, P&L account, and balance sheet, right? So how will you prepare these accounts? How will you prepare these accounts with the help of these formats? So this is my session to all of you that first of all you should go thorough out these formats of trading account, P&L account, and the balance sheet, because once you are familiar with the terms, once you are familiar that exactly what item would be shown in which side of the account and in which account, and it is related to direct cost or indirect cost. So first of all you have to focus on few items, right? So, and one thing more that you have to keep in your mind, that few items, right, in the format should be arranged in a particular sequence, right? The very first is opening stock, then purchase, then less return, right? And after that, you are not compelled to arrange in a particular specific order other expenses, right? But the very first 3 4 items should be managed, should be arranged in a particular order, and same is with the sales, return, and closing stock, right? So this is the particular format, and you have to learn, you have to remember. I will not tell you that only the practice. I will tell you that only the practice will make you perfect, right? For preparing the trading, P&L, and balance sheet, right? So final accounts are not very difficult if you have understanding, if you have the terms in your mind, and the trial balance would be already given to you, right? Would be given to you, and on the basis of the balances which are shown, which are displayed in the trial balance, one by one you have to select the item, you have to identify the item, and you have to select the place, right? With your understanding that this particular item, for example, opening stock was given you in the trial balance, right? So where you have to show this particular item of opening stock, no doubt, as I told you that opening stock is maintained in the godown or the factory. So that is the trading account, is related to the trading account. So you have to keep in your mind few items, and by solving the different questions, automatically the different items or different expenses and incomes would strike to your mind, and you will learn how to deal with those items, right? So I think it is enough for you to understand that what is the financial statement, why we are preparing the financial statement, and what is the way to prepare the financial statement or the final account. Okay, this is again balance sheet, and I think this is the right time to attempt a question, and by solving this question you can develop the understanding. Okay, so for that purpose, we have to approach to the question in the Excel. The following trial balance has been extracted from the books of XYZ Limited. Any organizations may be given. As on 31st March 2024, prepare the trading account, profit and loss account, and balance sheet for the year ending 31st March 2024. So as I told you that if you have to solve the question of final account, the trial balance would be given to you in your question. So you can read yourself that this is the particular trial balance as on 31st March 2024 with these items. The very first item is the capital, then drawings, sales, purchase, return inward, return outward, wages, carriage inward, carriage outward, salaries, rent, insurance, debtors, creditors, furniture, machinery, cash in hand, bank, provision for doubtful debts, and closing stock. And this is the total of trial balance. Okay, and additional information, right? These are called the adjustment. So you have to make these adjustment in your final statement, your final accounts, right? So the very first thing before you proceed with the preparation or preparing your final accounts, you must read, you must go thorough out or each and every item given in the trial balance, right? So that you make the understanding that exactly how to post this item, how to write, how to carry this particular item to a right place in the final account. As the capital, right? The first item is the capital. So as per the format, can you remember that where you have to show it, where you have to carry this balance? Yes, as I told you, okay, just go to the particular slide, that is balance sheet. As you see that capital, okay, I showed this particular item in the liability side. So as per the question, the capital is given for rupees 5 lakhs. So where you have to display it? So as per the format, the balance sheet, right, you have to mention in, and this capital would be written over there. Okay. So I told you that you have to keep in the mind that these are the formats of trading account, profit and loss account, and balance sheet. Because if you are not remembering and if you are not trying to keep in the mind, these are the very common items, and you can develop the understanding as capital, because the as per the accounting principles from the organization's perspective, the capital is the liability of the business organization. It means this amount which is invested by the owner, it has to be refunded, is has to be repaid by the organization after some time, right, if owner require that. So at the time of shutdown the business, so capital is the liability of the organization and it is to be displayed in the liability side of balance sheet, right? So you have to keep the concept of every item, every expenses, every income, assets and liabilities. So capital would be shown in the liability side. Okay, so again to the question, the drawing, as I have displayed again in the balance sheet, that you have to add the net profit in the capital, and after that you have to subtract the amount of drawings and you find the adjusted capital here, and you have to mention that particular amount, right? Next is the sales. So sales, where you have to mention this particular amount. Okay, just have a look. Yes, this is the format of the trading account, right? And in the credit side you can see yourself that there is a mention of the sales, so you have to write the sales here. But if there is a particular return inward, so you have to subtract that amount from sales and you find the net sales amount, right? It would be mentioned outside or in the column of amount. Okay, and after that purchase, again you can see in the debit side of trading account, and purchase inward, it means in the debit side or credit side. Purchase inward or outward? Inward, it means it is the sales return. So you can see here that return inward. So in terms of return inward, you have to mention this figure. And return outward, it means outward, that outside of your organization if you are returning, so that is the goods which was purchased by you. So return outward rupees 10,000. Outward, it means you purchase the goods and now you are returning the goods, so it would be shown as a, as you have to subtract this particular amount, right, from the purchase amount. And wages, this is the direct cost because the workers are involved in the direct production process, so it is the part of the factory, it is the part of the trading account, so you have to show this in the this item in the trading account. Okay, carries inward, as I told you, that when you are bringing the material or product in the factory, right, so carries inward is has to be paid, so that time it is again the particular item or the expenses related to your factory, related to your production, so you have to mention in the trading account debit side. All the expenses would be shown in the debit side, all the incomes would be shown in the credit side. Okay, another item is carried outward. So this is the particular item which is not the direct cost. Okay, so you have to show in the P&L account. And salaries, as I told you that employees are working in the office. Okay, so salaries would be treated as the indirect expenses and would be shown in the P&L account. Okay, and you can have a look, right? The very first item is the salaries, because the major expense of any organization is the salary, right? And we come to the next item, that is the rent. So you are paying the rent, so it is again Yes, it is mention worthy that if rent is related to factory, so it would be shown in the trading account. But if it is related to office, so it would be shown in the P&L account. But when there is no mention and you can say specifically it is not given that rent is for factory or office, then where you will write it? Okay, so you have to show it in the P&L account. And insurance, right, in the P&L account. And debtors would be shown in the asset side. Okay, just go to the format balance sheet and you see debtors in the asset side. So debtors would be written over there and value in the amount column. And creditors, okay, I show you the balance sheet format. Creditors, this one. So in the liability side you have to show the creditors and amount in the amount column. And furniture, again the assets in the balance sheet. Machinery, again the assets in the balance sheet. Cash in hand, okay, this one, as you can see, in the asset side in the balance sheet. And bank balance, again you can see the format of balance sheet: cash bank, cash at bank. And provision for doubtful debts. Okay, so further when we will solve this question, we would be covering it, that how to treat this particular and what is the solution and what is the treatment of the provision for doubtful debts. How will you treat it in your books of accounting or in the financial statement, right? And closing stock, exactly how to solve it. So this is the particular trial balance, and you have to prepare the financial statement with the help of trial balance. But verbally I showed you that how to maintain, how to make your, or how to prepare your financial statement or final account with the help of the trial balances, right? So trial balance is given to you in the question, and each and every item throughout you have to read, you have to think that where it is to be taken to, or to be shown. So there are three accounts. Okay, just go to the particular slide. The trading account, right? P&L account, or the full form is the profit and loss account, and the balance sheet you have to prepare. So it is not tough for the students to prepare the final accounts, but it is you can say lengthy process, because okay, because you are having the summary, right? You are having the summary in the form of the trial balance. So I think it is not difficult for you. But exactly what is to be done, you have to mention each and every item which is displayed in the trial balance. So you have to take a particular item to a right place. Right place means, it means maybe it is it has to be written in the trading account, it is to be mentioned in the profit and loss account, and maybe in the balance sheet. So once you are ready of developing the understanding that this is the expenses, this is the income, and this is the asset, and this is a liability, so all the assets would be shown in the balance sheet and all the liabilities would be shown in the liability side of the balance sheet. Only there is a matter of expenses and income. So generally expenses are shown in the P&L account, but in the trading account when we talk that what kind of the expenses would be shown. So I told you that the expenses which is directly related to the cost or production process, right? So it is related to the cost of product, it is directly related to the factory, it is directly related to the production process. So you can have an idea that this is to be shown in the trading account. Okay, and other expenses would be treated as the indirect expenses and would be shown in the profit and loss account. So I think if you are having the format in your mind, if you have gone through these formats and keep an idea of expenses and incomes, assets and liabilities, so it would be very easy to calculate the question of final accounts, right? So for your small revision, for the takeaway of the day, I would repeat that today's session is covering the trading account, profit and loss account, and balance sheet. All are involved or are included in the final accounts of financial statements, right? So final account is the set of the financial statements, right? And financial statements are prepared in terms of trading account, profit and loss account, and balance sheet, and there are specific formats right, with some items. So if you want to learn these final accounts, how to solve the question of final account, how to prepare the financial statement at the end of the year for a business organization, then it is my suggestion to you that keep the format in your mind, and you have to identify the different expenses, incomes, assets and liabilities to be shown in the three different accounts, or two accounts and one sheet, that is the balance sheet. So in the trading account you have to show all those items which are related to cost of the product, which are related to direct cost, which are related to direct cost of the product, or which are involved directly, right, in the production process. So trading account is to be prepared, and with the help of the trading account, or by preparing the trading account, you will find out the gross profit, you will calculate the gross profit, and this gross profit would be brought down to the profit and loss account in the credit side, and maybe some other incomes are also included in the P&L account if some other revenues are given to you, right, for example rent and interest income. And in the debit side, the indirect cost, right, the different expenses would be shown. Okay, so on the basis of this gross profit and other revenue items, and on the basis of these expenses, indirect expenses, you have to calculate the amount of the net profit, and this net profit would be carried to the liability side and would be added in the capital, because your capital is increased by adding the net profit, right. So it is to understand that we are preparing the trading account, profit and loss account and balance sheet, but because you are having the trial balance, and those balances or the accounts which are included in the trial balance are to be carried, right, in the particular place in trading P&L and balance sheet. So you have to be very conscious regarding that. Okay, so I am not just telling you that you have to go for cramming, right. You have to keep in your mind the idea of the items, the idea of the expenses, the idea of the incomes, assets and liabilities, and basically you have to segregate, and you have to go one by one on each item, and that item has to be picked up, and you have to mention in the trading account, profit and loss account and balance sheet. Okay, and after that you will come to adjust or to make the adjustment, right. As we are going, we have to approach to the question. So I just read about the question, and I think now the concept is clear that what is the financial statement, what is the signification, what is the significance of final accounts, and what is the role of final accounts, and exactly what is the purpose of final accounts, and what about the gross profit, net profit, and what can we do with our financial statements. Because as I told you that the stakeholders of accounting, or of the organization, are basically requiring the accounting information for the different purposes, right. For example, the income tax authorities are having the desire to find exactly, or to take the information regarding the profit, because the profit will base, right, profit would be required for calculating, for computation of the tax liability, right. So this is the particular requirement, and another one is that the stakeholders are desiring to have the information from the financial statement in order to make the budget, in order to make the investment in the business, or to take the informed decision. So this is the particular significance we are preparing the final accounts for, right. And in the next lecture, definitely I will be solving practically this question, right. So verbally now I told you that how to enter the particular item or the expense, income, assets and liabilities in the financial statement, but when you will solve the question, I am very sure that you would be able to solve the question practically. So for the day, it is enough for developing the understanding of financial statement. So thank you very much.